Good afternoon, and thank you for joining me in this brief introductory presentation of QCM. I'm Rami Karim, the Deputy CEO of QCM, and in this short video presentation, I'll talk to you about who we are and how we can help you with your investment goals. The goal of this short presentation is just to share a few details about QCM and its product offering. For any further information, please do contact us. QCM was a 28-year-old UK-based hedge fund manager, and we've been running since 1995. Our flagship investment offering is the QCM Systematic Macro Program. QCM was founded by Arif Karim, our CEO and CIO. Arif has over 40 years of buy and sell side experience in systematic trading and portfolio management. He leads a highly qualified team. QCM at its peak managed close to $1 billion of mostly institutional funds, including pension, sovereign wealth money. Today, the firm is regulated fully by the CFTC and MFA. The goal of QCM could be summarized in 4 key points. 1, to provide absolute risk-adjusted returns over the long run that are not correlated to major traditional asset classes, such as bonds or equities. 2, to compound investor wealth through our own growth vehicle, which aims to participate in most economic environments, good or bad. To offer you as the investor the ability to customize a product to meet your own unique requirements. And finally, to give you comfort and safety of an offering that is fully regulated, highly liquid and transparent in terms of knowing where your monies are invested. The Systematic Macro Program is our flagship. This is a systematically executed long-short investment program. It trades exclusively in regulated exchange trade futures around the globe. Through this product, we look to bring you non-correlated return streams in a highly liquid strategy. Non-correlation is a powerful property here, as it allows our product to be blended with other investments, helping reduce risk without compromising on upside returns. The S&P has traded for 28 years, and through its course, the models and underlying strategies have evolved. As a general policy, we continue to research and enhance our products. Now, let's take a big picture view of what the S&P is and how it's made up. We can think of the S&P as a product that generates its returns from 2 key silos. The long-short macro part forms the core of the strategy with an 80% investment allocation, and a separate 20% allocation is made to a mix of trend-following strategies which have some traditional as well as differentiated approaches that are entirely proprietary. These brown circles just add further color by showing what our core 80% is made of, which is a combination of a long-only macro engine plus long-short tactical tools. We apply this product to 9 different markets around the globe in stocks, bonds, commodities, and FX. So let's expand on the main parts of this construct. As I mentioned, 80% of your investment allocation is allocated to a combination of a long-only macro engine, where positions can be further modulated by its co-part, the tactical tools. Think of the core long-only as a strategic engine that is then tweaked by the tactical. The strategic part is the center of our asset allocation process, using a unique forward-looking probability approach that gives weights to markets that have higher probability of risk-adjusted returns by borrowing from areas of lower probability, leading to a dynamic process that shifts weight around the portfolio as probabilities change. This is a process that ranks our way of identifying market convexity. Our trend systems provide another avenue of differentiated returns. Together, the strategic and tactical provide a way of participating in big waves formed from market and economic dislocations and imbalances. The 2 components help emulate or align our positioning with both macroeconomic changes, as well as those brought on by endogenous factors. We feel tactical tools are necessary to support our bigger strategic engines by helping realign through turbulence and short or long-term shocks, including events like the global financial crisis or COVID. The tactical tools allow us to turn the macro long positioning to net short when necessary. This is not just a defensive hedging measure, but also to potentially gain from a market sell-off. This is often labeled as crisis alpha and as a unique property to our style of money management. Our trend systems pursue a separate avenue of return streams that are complementary to our core. In this product overview slide, we list all the markets we include in our portfolio. It also shows some of the qualitative attributes. The S&P offers you a fully diversified investment opportunity trades both in rising or falling markets. The product can sit on its own or along with other investments, whether that be stocks, bonds, or any other asset class for that matter. It is worth mentioning that QCM invests proprietary capital along with its clients. This further reduces conflict of interest, which we may have with our investors. So as a client, you can invest in the QCM S&P through a managed account that is in the investor's name. Managed accounts are highly efficient investment structures that allow a client to see with full transparency all their positions in real time, as well as their P&L. It also allows the investor to choose their own prime broker, with funds sitting in their name in segregated accounts, thus avoiding any conflict of interest issues. QCM never takes on client capital in its own books, but only has a limited power of attorney to make trading decisions for the investor in their own accounts. The QCM team is laid out on this slide. Worth a mention here is that there are many decades of combined industry experience in the QCM team, highlighting both longevity as well as relevant technical skills. These are backed by sound academic and professional credentials. So thank you for giving me an opportunity to tell you the QCM story in this very brief introduction. If you'd like to learn more, please do not hesitate to follow the company page and register your email so that we can add you to our distribution list in order to receive further insights. Thank you.